Hey traders, Desmond here. Welcome back to the IronFX Trading Podcast. Today we're tackling a question that sounds simple, but it quietly decides whether you build real skill or you build false confidence. Should you trade on a small live account, right, or a large demo account? Because here's the thing, both, right, can help you, and both can absolutely sabotage you, right, if you use them the wrong way. So let's unpack it like a coach would. Not from ego, from what actually builds consistency. I think of it like learning to drive. A demo account is the empty car park, wide space, no traffic, no pressure. You can practice steering, braking, parking, and turning without consequences. A live account is the real road, traffic, noise, real consequences. Suddenly your hands get a little sweaty when you have to merge lanes. Right? The question is not which one is better. The real question is, what are you training right now? Because trading is two skills at the same time. One, technical execution, reading price, planning entries, managing risk. Two, emotional execution, following rules under pressure, and those two do not develop at the same speed. Let's start with the big demo account because this is where most traders begin. A large, demo account feels good. You open your platform and you see a big balance. $10,000, $50,000, $100,000. And it creates this subtle illusion. You start trading position sizes that feel normal on that balance, right? But would be insane on a real account. Then you win a few trades, the equity curve looks smooth, and you tell yourself, okay, I'm ready. But you're not ready. You're just untested because the demo account usually protects you from three things. Number one, emotional pain. On demo, a loss is just a number on a screen. It does not hit the stomach the same way. It does not trigger revenge trading the same way. It does not make you second guess your plan the same way. Number two, execution reality. Demos often have cleaner fills, less slippage, less spread widening at awkward moments. Sometimes the execution feels like the market is politely cooperating. Live trading is not polite. Live trading is a busy street market. If you try to grab a perfect price, sometimes it's already gone. Number three, discipline under uncertainty. On demo, you can hold and hope, you can move the stop loss, you can average down, or you can do all kinds of things you would never admit out loud, because it does not hurt. On leaf, you do that once or twice and you feel it, right? And that feeling changes your behavior. So if you use a large demo account like it is a game, right, you're not learning trading, right? You're learning fantasy. But let's not throw demo accounts away because demo is incredibly useful when you use it properly. Here's what a demo account is best for. It is best for building a repeatable process. It is best for learning your platform and avoiding dumb mistakes. It is best for strategy testing, not in the I won 3 trades so it works way. In the I took the same setup 50 times and tracked results way, right? It is best for drilling entries and exits until they become boring. And in trading, boring is a compliment. Right? Now let's flip the script and talk about the small live account. A small live account does something a big demo never can, right? It teaches you how you actually behave when the outcome is real, right? This is the part most educators won't tell you clearly enough. If you cannot follow rules with small money, you will not follow rules with big money. Money does not fix discipline. Money exposes the lack of it. A small live account is not about getting rich. It's about getting honest, right? It's about learning what happens to your decision making when you are in a trade and price goes against you. Do you tighten the stop too early? Do you cut winners too fast? Do you hesitate and miss entries because you are scared? Do you start overtrading because you want to make back a loss? That's the real curriculum, not the chart pattern, the behavior. Because technical analysis is like a map. Psychology is where you panic when the road gets bumpy. But here's where it gets tricky. A small live account can also hurt you if you treat it like a lottery ticket. If you deposit $100 and then you try to flip it into $1,000 this week, what are you training? You are training desperation. You are training oversized risk. You are training the habit of swinging for the fences, right? Which is exactly how accounts get blown. So the small live account only works if you use it with one rule. Use size trades so small that the result does not matter financially, but it still matters emotionally. Right? That sounds contradictory, but it's a sweet spot. You want it to be real enough that you respect your stop loss, but small enough that you can survive the learning curve. Let me give you a practical example. Let's say you're trading euro dollar. On demo, you might take a position so big that a 10 pip move feels like easy money. You're not thinking about structure. You're thinking about profit. On a small live account, you trade a micro lot or something equivalent. The profit is small, the loss is small, but the decision is real. You still feel the temptation to move the stop loss, right? You still feel the urge to close early, right? You still feel the fear of being wrong. And now you can practice doing the right thing, right? That's the beauty of small life. It makes you practice the only skill that matters long term, following your rules when you have feelings. So which one should you choose? Here's my hot take. Most traders should use both, but for different jobs. Use demo for mechanical competence. Use small life for behavioral competence. Demo is your training ground for execution and repetition. Small life is your training ground for discipline and emotional control. If you only do demo, you risk becoming a paper trader who looks great until the first real loss. If you only do live, you risk paying expensive tuition while you're still learning basic structure. And if you do neither properly, you end up doing what most traders do: random trading, random sizing, random results. Now, let's get specific about how to set this up in a way that actually makes sense. Step 1, right? Make your demo account match reality. If you plan to go live with $500, do not demo trade with $50,000. Set your demo balance close to what you'll actually trade. Why? Because position sizing and drawdowns feel completely different based on balance. A 10% drawdown on a $500 account feels like a punch. A 10% drawdown on a $100,000 demo feels like nothing because you never earned it, right? So match the numbers and suddenly the demo becomes useful. Step 2, demo trade with live rules. Same risk per trade, same stop loss logic, same daily loss limit. If you are risking 2% per trade, write it out and stick to it. Right? If you cannot follow that in demo, you are not ready for live. And step 3, when you go live, go smaller than you think you need. The goal is not to impress yourself with profit. The goal is to prove consistency. Consistency first, size later. Let's also talk about the biggest trap I see with this topic. Traders often say, I'll master demo first, then go live. Right? But they never define what master means. So they stay on demo for months, sometimes years, looking for the perfect strategy, right? And when they finally go live, they blow up anyway, right? Because the real issue was never the strategy, it was the behavior. The market is the same, but you are not the same when it's live. So define a clear graduation rule. For example, you can say, I will take my setup at least 30 times on demo, following my rules with a documented journal. I will prove I can stop trading after my daily limit. I'll prove I can respect the stop loss. Then I will go live with small size. And not because I am confident, because I am committed to practicing the real skill. One more thing, personality matters here. If you're the type who gets anxious easily, a large demo can build confidence and competence before you face pressure, right? That's fine. If you're the type who gets overconfident and reckless, demo can make you worse. You need the small live account to keep you humble, right? If you're the type who overthinks and hesitates, small live can actually help you pull the trigger, right? Because it forces you to accept that being wrong is normal. And if you're the type who revenge trades, your first mission is not profit. Your first mission is learning to stop. The real secret is this: your account size does not determine your success. Your ability to execute the same process over and over does. So let's wrap it up. A large demo account can be useful, but only if it is realistic and rule-based. A small live account can be powerful, but only if it is treated like training, not gambling. If you want the clean path, here it is. Make your demo balance realistic. Practice your process, journal your trades, then transition to a small live account with tiny risk. Focus on discipline, not income. When you can follow your rules through wins and losses, then and only then you scale. Because in trading, the fastest way to grow is usually the fastest way to blow up. And the safest way to grow is the one that feels almost boring. Boring, consistent, repeatable. That's what real traders aim for. Thanks for listening. If you want more practical trading education like this, follow the IronFX channel and stay tuned for the next episode.